Hey, what's going on, guys? Edward here with another video. This time, I want to talk about price action. Um, Again, I did a poll on Telegram. Basically, I wanted to ask you, what would you like to see next on my videos? So I see there, I found there that plenty of you guys are just wanting to know regarding price action. Like, what do I do? How do I find my entries? So this video is going to be about that. I hope you will like this and you can stay until the end. Okay, so basically, we're going to be starting with, we're going to be showing you this with US 30, okay? One thing, as I always tell you, and this is why I love indices, is because they are constantly on an uptrend, okay? This type of drops, these corrections, this will happen if something happens in the world. It could be, this was coronavirus, something happened in 2018, I don't remember what was that, but these are usually very bad news, that affect the markets, okay? So basically, what we are seeing, just maybe from here, right? I'm on a daily time frame, so you can just see just a clear push up, okay? So at this point, I don't know if you remember this for a few days ago, right here. How do I draw my supports resistance as well? Just price action. What do you see? Like, I'm going to remove that. You see a price getting to a point several times without, like, it doesn't want to break to the upside. It's not showing any type of signs of a breakout. So at that point, there is something there. This is a daily, right? I'm drawing this on a daily time frame. I'm drawing this, okay, somewhere like that. It's a zone, okay? You can stretch it maybe there because it's a zone. It's not just a line. The price could reject anywhere in this zone, okay? You see this big peak right here as well. So those big wick rejection, guys, have this in mind. These big wicks rejections, have this in mind, okay? Because when they happen, they're pretty much telling you where the price is going to go. That's simple. See right here, price showing big wick rejections. Price is going to push up. You see a big rejection on the top. Price doesn't want to go up. It is going to go down. So it will come back down. So it's important to watch it from time to time on a daily. Checking the daily time frame, it will help you a lot. Daily, 4 hours, 1 hour. Okay. So what do you see there? The price, at some point, it broke above, and then all of a sudden it started to come back down again. So just right there, and in fact, in this drop right here, you can do from here, you can draw a trend line right there. This is on a daily time frame. So it's going to take some time if the price want to reach this point again in the future, but that is already a trend. It's creating a, you see, this is a low, and this is a lower high, a higher low, I'm sorry. So higher low, low. So when the price creates that, in fact, at that point, many people are asking me as well about Fibonacci. So let's say all the way to the top. So from the bottom to this last high right here in the price drop, look what the price stopped right there in the 50. So this is an entire zone. This is an entire zone, okay? This is called golden zone, okay? Right there. So price, at this point, it created, as soon as the price creates a higher low, right? This is a low, higher low. As soon as the price creates the first higher low, at that point, I usually draw my trend. I know that's a trend line. I know that could be the beginning of the trend line, okay? So very important. Fibonacci, I just use it to pretty much have an idea. So what do you see? So price pushed up, came back down, retest, or it did a very nice pullback on and touching the 50% on the Fibonacci, and then started to shoot up. So that push from here, you see it broke very strongly and now started to consolidate. It's still, the price is still, because this is a very strong daily zone, right? It's a very, very strong daily zone. The price was consolidating like that. It took like 10 days. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days basically, okay? And on top of this zone. And it kind of looks like from here, it kind of looks like a flag, okay? This is what I'm based off. Like, I love flags, all right? It kind of looks like a flag. It is most likely. So price broke and retest with, you know, since this is a daily time frame, this retest took 10 days. So, and then after that, just pushing up. So this is already telling me this is going to keep pushing up. And at this point, that is good news. Once the price broke above, finally, then bouncing off this zone, very strong there, then let's jump in on a 4-hour to see what the price action is doing, what the price action is telling us. So from this, I just draw a line from this point, pretty much trying to follow the movement. Okay, so this is the movement. This is the part where, you know, price broke. It was consolidating for 10 days and then started to push up. So you see also from here now at this point, you can also draw. You can draw this. You see this zone here consolidating several times. So you can draw. There is definitely a zone right here. The price didn't want it to break above. Right, just concentrate in this point, you know, touching, 3 touches, and then it broke. But then after the breakout, this was already telling you the price wants to go up. But however, the price needed to create a pullback. So guess what? Same thing from this low, from the push to this high. You see, we are on an uptrend now. So 1 second there. Okay, so from this low to this last high, the price came back down and look, golden zone right there. The price did created a what? The most famous flag. Beautiful flag right there. Okay. Beautiful, beautiful flag. We traded on the breakout. Of course, I'm on a 4-hour right there. So if I go, most likely this was a 15-minute, maybe. Let me see 1 second there. Right there, you see the flag. Really nice flag formation. Really nice flag right there. In fact, you could maybe draw it from here. Let's say here, right? Delete. 1 second. Delete this one. Clone this one. And put it there. There we go. That's a 15-minute. That is a 15-minute flag. And we detected this a few days ago on the channel. I did share the analysis. I told you guys, buy here. And I was getting in. You see, beautiful. So if you want to follow, if you saw my previous video, when for the trading plan, this is at the entry point. Okay. So if you would have waited this 15-minute candle to enter right there, which is what I did kind of get in kind of aggressively. I did somewhere in here, but if you want to wait for the candle to close right there, that's the entry. Stop loss below this last low. Take profit at least to this zone. And that's what I did. Beautiful, beautiful push. This flag is already telling me the price is going to break. At some point it's going to break. So I'm going to be prepared. I'm setting my alerts, putting my alerts somewhere around here at alert. Let's see. So I put my alert. So I'm just watching and just, you know, if the price hits, boom, I'm going to be checking and I will be making my entry right there. So this was 100 and I don't remember exactly. It was like 126 pips I did in this push because I did getting somewhere around here. So it was like 126 pips that I get. Beautiful, beautiful entry, guys, right there. So it's basically price action, what you're seeing right there. As I mentioned, you go from the low to the high. If you can use the Fibonacci, just to give you an idea. So from the low to the high, and you see the price came back and touch our golden zone right there. So after that, that means the price that doesn't necessarily mean the price will push up, but if you see a sign, and what is the sign? The flag. That's it. What else do you need? So basic price action right there. So what the price did again, so it broke. You see this, and I always explain you this in every single video. Every single video. I will do it again. Price will push, and then it will come back down. Oh, you know what? I have a new tool here. I think it was this one. Let me do it. I think it's simple. So price pushing up, coming back down. We'll do this, 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 this here, and then push. It will reach this last high, okay? When you see this formation right there, okay? So you draw your flag. It's not letting me, 1 second. Okay, so you draw your flag right there. Okay, you enter right here with the confirmation of the body of the candle. Okay, I think I saw another question right there with confirmations. How are you getting with the body of the candle? You need to wait the body of the candle. So I'm going to tell you something right here. So price broke right there, and I always tell you, guys, you should be taking most of your profits. Where's the rectangle? Here. You should be taking most of your profits right there. Okay, that's what I did right here in this point. Close it. So entry, I did the entry on the breakout, a stop loss right here below the low, take profit at this zone, or you can aim 1 to 2. Okay, whatever you want to do at that point, that is just fine. But at least, please, guys, when the price reaches this point, I recommend you taking your profits right there, because why? At this point, price could just come back down and do an M formation. It could be doing a double top and it could just drop. Okay, so that's why. That's basically why. All right. But what the price did here, look, you see, even on a 1 hour, you see price pushed up with a big rejection, right? This big weak rejection. This could actually scare you out already. Right there, this big weak rejection, it could have scared you out. So we waited in the next candle. You see the next candle, next yellow candle, it broke above and it closed. You see, it closed above right there. So if you would have been aggressive, you would have entered right there, stop loss below the zone, maybe a few pips below the zone, or even a lot lower, because sometimes I've seen the US 30 does a deep pullback, so it could stop you out. But anyways, it doesn't matter, because you're very, like, you're entering in a very nice entry right there in a very good position. So you enter as soon as you see a breakout of the last high, you enter when the candle, the body of the candle is closing above the zone that you draw. Simple as that. Do not enter in this candle. Like you saw this candle, it was too soon. You have to wait for the body of the candle to close above the zone. Please wait for that. All right. So you would have been aggressive. You enter there, boom, stop loss below the zone, a few pips below, and then your take profit. At this point, there you don't know where to put the take profit. Why? Because the price is creating new highs. So there's nothing in the back where you can take your profit. So you can do whatever you want at this point. You can do 1-to-1, 1-to-2 risk to reward, or you can use the indicators. But because this class is just about price action, you can maybe 1-to-2, 1-to-3. Let's say you want to do a 1-to-3 risk to reward. That's up to you. Okay. But because there's nothing in the back, guys, there's nothing else right here that you could take profits. So it's a good sign because the price is pushing up. And guess what? What is the price doing here? If you scale in here on a 5 minute, most likely it's another flag. So guess what? You're gonna maybe most likely make another entry. Where was it? Here. So that was actually a pullback right there. So you could have seen maybe some type of flag formation here, or consolidation. This 5 minutes looking ugly, but it could have been could be a flag right there. You can clone that line, just put it on top, and that is a flag. Okay, this could have been just a fake out, but that's a flag formation anyways. The price was retesting the zone, and then boom, it started to shoot up. You enter on the breakout of the flag. Maybe you would have entered right here, and maybe you gotta, let's see how it looks. I think it looks better on, yeah, look at that. So it looks better. You see what I mean? Sometimes, depending on the time frame you are, the flag will look better on a certain time. So that thing is not letting me see. Okay, so maybe there, you clone the line, put it on the bottom, right there. So you waited for the breakout of the candle. You see the 15-minute candle, you see the entry. What the heck? Not letting me see. Okay, so you see this one, the only one that broke, this one right here. So being patient is what matters right here, guys. Just being patient. So you waited for the candle, about the 15-minute candle to close above your structure, your lines that you draw right there. That was your entry point. Entry right here, boom, stop loss below, take profit, closing some profits right here because it's kind of scalping. So closing some profits right there. And you can, after that, you can just go 1 to 1, 1 to 2 risk to reward, 1 to 3 risk to reward. Price just kept flying. But we're basically following price action. You see, I'm not using any indicator at all. And when the price is creating new highs, and when the price is creating new highs, that is a good sign. It's just going to continue. And you're just going to have to wait to see what the price is going to do. Now, I will show you right here at the moment. Look at this at the moment, what the price is doing. I think I sent you, let me just start deleting some things right here. Here's clean just some stuff here. So 1 hour, I believe yeah. Look at what's happening. The price is creating and breaking structures. You see, it's breaking highs, broke the high, it broke this last high, retest, and then flow away. So when the price is pushing up, you just have to let the price tell you what the price is going to do. Like price, because there's nothing else on the left, the price will create a structure, okay? And this is the structure the price is creating right now. It's creating some type of, the price is pushing, but very slowly, then it came back down, did a retest, and created this zone. Now you see it like this on a 1 hour, but look how it looks on a 4 hour. Look how it looks. You see a big wick rejection. And I told you, I think it was on Friday, if I'm not mistaken. There's something here. I draw a 1 hour, trend. I think it was something like that. Oh no, it was here. I draw 1 hour. Draw 1 hour from here to there. And I started to see the price breaking down. But guess what? Also, well, I'm going to show you this RSI divergence here. This is not part of price action. But anyways, you see this big divergence right here. The price is creating. See, price is creating. This is a high and a higher low. This is a high and creating higher highs. So here is going up and right here is going down. So this is a divergence. So this is telling me already that the price will come back down. Most likely, I'm pretty sure the price, as soon as the market opens on Monday, the price will come back down a little bit, maybe test or maybe do a deeper retest in this zone, maybe reaching this last zone right here, and then continuing to the upside, okay? But because of that divergence. But anyways, that's for another class. Now look how it's looking on a 15-minute. Just the structure. You see, when the price wants to go down, it will start breaking, creating structures and breaking structures. So see price, at this point, you see the big wick, okay? That's already telling you, I wanna come back down. So it came back down, bearish engulfing candle right there, bearish engulfing candle. Price came back down, 3 weeks rejection. So that means there is somehow it's creating a small, a touch, a stop right there in a very, in this kind of zone. You can call this, maybe it was somewhere around here as well, the zone. Just draw just a nice line, right? Price stop right there, doing a pullback. Right there, if you want, you can use the Fibonacci maybe from the top to the bottom. You can see the price is, because it's creating this big bearish engulfing candle, so now you use it from the top to the bottom. See price did a pullback exactly in the golden zone and it started to come back down. Breaking, let me remove the Fibonacci. Breaking this previous high, this previous low right here, it broke it, came back down and came back up for retest, did a retest. You see this candle, these two candles, three candles touching. It tried to break above, it didn't, then came back down, and then now you're seeing a bearish engulfing candle right there. So right there, just following price action as well, not because you're seeing a flag or not, just you see just the price is telling you is breaking the structures now to the downside. That is a good sign for an entry right there. I did not get in because I mentioned my trading plan is only looking for bias, but I put this as an example. And I might send you the analysis, but I usually don't like selling. But anyways, you get the point. So stop loss below that last zone, the last high, okay, and take profit to this zone. Most likely, the price is going to reach that zone. See on a 4-hour, it's looking like that. I have this right here. I wanted to show you also. Yeah, look at this. I usually do this from time to time. Let me delete some of this stuff. And starting to see too many lines in there. But anyways, okay. Remove this stop. Okay. So what I like to do sometimes is I put two screens. I'm not sure if you're gonna be able to do it on a free version of TradingView, guys. I don't think it's possible. But I want you to see this as an example. 4 hours. Okay, I'm on a 4 hours, and right here in this chart, I'm on let's go in a 15-minute. So you go and you see how the structure is. You see on 15-minute, you see how the price actually coming back down, and you see as I'm moving my cursor here, you can see it's right here. You see these big rejections. So you see how it looks on different time frames. So this is how it looks on a 4 hour. Let's see how it looks here on a 1 hour. Still, you can also see the price actually 1 hour, it broke to the downside, and then big doji rejection right there, and coming back up to the structure, coming back for retest, and then starting to shoot up. So, and you're seeing on a 4 hour just a big weak rejection, and that's already a sign that the price wants to push up. That's already a sign that when the price wants to push up. I'm sure that is correcting. Right now it's going to make a correction, maybe consolidation on Monday, and then it will break. Now, guess what's going to happen on Monday? If the market does this, comes back down, tests the zone, comes back up, here, the price could simply break to the upside or just bounce up there and maybe break now to the downside. And it could, you see as I'm pulling this thing here as well, is moving on the right side here. So it might actually come back down, okay? So right here, this is a very good entry point. Guess what? Just going to try to find on Monday. I'm seeing this on a 1 hour, right? You see, and even here you see 4 hours, you see a big weak rejection. So I should be waiting at least a 1 hour candle to close above the zone for me to maybe go or looking for a buy. So let's say the price close right there. So I make my entry there, stop loss, maybe a few pips below, okay? And right there, you can do 1 to 1, 1 to 2, because there's nothing left, nothing on the left where you can see. So you can just follow from that point, 1 to 2, 1 to 3 risk to reward. And if you start seeing the prices creating new highs, is good sign. It's a good sign. That's basically what I do, guys, with price action. I like to play with this. I like to back test it. I love US 30 and Nasdaq because they are so respectful. When they are consolidating, I'm not gonna lie, I hate it, and you should not be getting in when the price is just consolidating. There's nothing to do there. Like if you want to scalp it maybe in a 1 minute, 5 minute, I mean that's fine. But in a longer period or holding an entry for longer, you don't know where the price is actually going to go. Okay, so the best thing to do is wait for the breakout. Simple as that. Wait for a breakout, either to the downside, right here, right, or to the upside. Okay, simple. Right here, you could say, but then you enter right here on the body of the candle, and you enter right there, and you put your stop loss below the zone, and you got stopped out. Yep, that's going to happen. That's part of the game. Losing is part of the game. But you saw it well, anyways, that if you lose that one, you're like, oh, I understand the price is just doing a pullback. I was so stupid. Okay, so I shouldn't get in. no problem. The price maybe, yes, fake people out right here. Yes, that's what it looks like. The price just pretending that the price was going to push up, and it actually came back down for retest. So at that point, when you see the price coming back down, you can draw your Fibonacci from the bottom to the top, and you can just patiently wait and see what formation is going to do. Like, and you're starting to see, boom, boom, boom. Oh, so I'm starting to see a flag. Okay, really nice. So seeing the flag plus the price is already touching, so you're getting more confluences. You see, you're getting the confluence that the price is reaching this zone, right? It's reaching a trend, right? It's reaching a trend. So that's the first confluence. It's touching also my golden zone on the Fibonacci. That's the second confluence. Plus, it's creating a bullish flag. That's my third confluence. I'm just going to wait for the breakout to get in. I'm not going to get in yet because the price could maybe melt, or whatever news comes in, maybe drop. Okay, it will fall. But I'm just going to wait for the breakout of the structure, and I'm going to get in. So you see, you're finding more confluences on your entry. You're not just entry just because. Okay, if you lose this trade, you lose it. That's going to happen. You're going to have some losses. But then you realize, you see, ah, man, this was okay. No, I mean, that's fine. I take that loss. I'm not going to cry. And then you see the price creating the flag. You're like, okay, this is where I'm going to get my money back. So I'm just patiently waiting for the breakout, and this is your real entry point right there, either right here on this 15, could be waiting for the 15-minute candle to close, boom, entry, and take profit at least to this last high. And that's basically price action. That's basically price action right there. I was just waiting for US 30 to get out of this big consolidation right there. I was so happy when I saw the breakout because I know this is going to start now continuing pushing up. And I'm going to do some tests. Like, I'm most likely going to maybe fund a new account. I'm just doing some tests. I don't know yet exactly how much money I'm going to put in that account. See if I can hold entries for a month, for an entire month. Like, for an example, let's see, March, this is February. Right, let's see from the beginning. This is March. So March until the end. Let's see, March 31st. So right there, you have to see the entire month of March, the price was just pushing up. How many pips it pushed up from the entry to the close right there? It was 153 pips. Okay, in that month. I mean, that's not bad. 153, that's a lot. If you want to hold, okay, if you want to hold the account for longer, this that's for like swing trading. Let's see, 30 first. So right here, how many pips this month? From here, let's see, where do you close it? You close it here, like 134. Is it 134 or 1,000? That's not 100. My God, what am I saying? That's 1,000 pips. That's 1,000 pips. I was saying 100 and gotta be kidding me. Who was saying 100? That's 1,377 pips right there. And this same thing, you enter here and you close it here. That's 1,509 pips on US 30 right there. So I was like 150. What? So all right, you see. So because it's going up constantly, many people or big buyers, they're just buying maybe at the beginning of the year and getting out on December, okay? And so for the whole year, let's say, I mean, you can do this, but of course, hoping nothing like this is going to happen, because if a pandemic happens, Jesus, most likely you're blowing everything. But some people, I do believe that for the entire year, let's say you want to buy a car, or you're saving for something, you want to buy something, you want to buy a car, you want to buy a house, or maybe you want to get some money to, I don't know, to pay for your school, for whatever. Getting in by the beginning of the year, because the Nasdaq, this is the economy basically of the United States. If this falls, it means the government is going to fall. Okay, it means definitely the government is going to fall. So it is not going to fall unless a pandemic is happening. You see, I'm on a monthly chart and you see just pushing up. This was coronavirus, but like you are constantly seeing this pushing up. So this is basically the economy right there. So like I mentioned, I'm going to start considering maybe making a big entry and holding it for an entire month to see the results, okay? To do a swing trading and plus my scalping, what I do daily, okay? So I think what I'm going to do, that's what I'm going to take a look now. And that's it, guys. This was pretty much price action. Trading on the breakout of the structure, trading on the flag, okay, on the trend. I showed you a little bit of, using the actual Fibonacci when you are in a trend, like right here, as I mentioned. At some point, the price has to do a pullback. At some point, the price will have to do a pullback. So let's say price broke here. I wanted to show you this right quick. Price broke here, retest, and then started to push up, push up, push up, push up, push up, push up, all the way up here, right? And then fall. Guess what? You use the Fibonacci from the bottom to this last high right here. Where the price stop? 50% in the Fibonacci. And plus you're seeing the trigger, okay? If you were on my mentorship class, you know what I'm talking about the triggers. That's an entry point right there, beautiful. And this is a good tip I'm going to show you right now. When, in fact, with this Fibonacci tool, I will put a Fibonacci here, and I will share with you the settings. So you can copy, you can maybe screenshot this. You can just stop, pause the video, and get these settings, just right there. And I think that's all. Yeah, pretty much that's all. So these are the settings I use. Now, when the price, this is just an example. Okay, let's say the price, you cut it from here, you cut it from there, then start to come back down. Okay, when the price reaches the golden zone right there, let's say right here, you found a trigger, you find a bullish engulfing candle, or this one right here, the one that I showed you, and then you enter right there in the trigger, boom. You can be aiming your take profit to this zone, guys, at least to that zone. Okay, sometimes the price will reach at least this one or this one. So you can put two take profits. You can aim the first take profit here, second take profit there, okay? Guess what? Guess what? What formation do you see there? What formation do you see there? A flag, right? This is just seeing a straight line. At this moment, you're just seeing a straight line. So what you can do to take your profits, let's see this one. So right here, most likely the price will create a flag on the way down, right there, right? So now on the breakout, it will break. So you're seeing this. You're seeing the push like this and the breakout. Okay. Now, same thing. I'm just telling you exactly what's going to happen. Okay. So this is the 100 of the Fibonacci. This is the 100 you see. So when you see a push, you draw your Fibonacci from the low to this high, right there. Okay. You see the price is coming back down, You watch this zone to see if it's going to give you a trigger. Then at this position, you wait for the trigger. You enter on the trigger, stop loss maybe below 61%, 61.80, or below the last low right here. It most likely form a last low, which is this right there. So you enter on the trigger, and guess what? The trigger is going to be maybe the breakout of the flag if you scale in, right? So your entry is basically right here, stop loss below the last low, take profit to where? Take profit, I'm going to put it here now in this zone. So enter right here on the breakout of the flag, stop loss below the low, take profit to the 27. So you can aim that, okay? You should have to be closing most of your profits right here at this last high, okay, which is here. And then if it's going to continue pushing up, most likely it's going to reach the 27, okay? Now, if you're lucky, this thing could reach and can get to the 100 if you're lucky, but I will probably be out by then, right there. It's like that. So this right here is this right here. Same thing. You use the Fibonacci from the bottom to the top. Use Fibonacci from the bottom to the top. Right here, of course, I draw it. Maybe it went a little deeper, but most likely you're going to be seeing it like this. It's going to be in the golden zone right there. So the price is going to start breaking, right? So you find something, you find a trigger here, and or you see the breakout of the flag, and boom, enter. You see? So everything you see here is this here, and is this here. See? Or this here. Same thing with the Fibonacci. From the low to the high, and there you go. So you aim to the 27, right? The 27, it touched it. It touched first the 100, okay, and then reached the 27. You see, taking profit at the 27. Now the 100 is above here. Most likely it's going to reach it, but that's going to take some time. So now using indicators, that's going to be for a different class, most likely, you know. Using these indicators, it will help you follow the trend, or when to get out, or when to determine if the price actually is going to start falling. But if you don't want to do that, you can just follow price action. You're going to start seeing the structures, the breakout of the structures. At the moment, the price is breaking the structures to the upside. So we're going to get concerned or worried if you start seeing a breakout to at least this structure, or maybe breaking this structure to the downside. Then that is a sign the price might actually pull down. It could be maybe doing a deeper pullback. If you go 4 hours, see how it looks on 4 hours. 4 hours, like for example, like this. You see in this push, big push, you see there's no pullback. So far, there's no pullback. This, I don't think that's a pullback. At least on a 4 hour, that could not count as a pullback if you do from here, from this push to this last candle. So you see, it's possible that as soon as the market opens, the price could come back down and test and touch this 38.20 before shooting up. Okay, it's very, very possible the price could reach the 38.20 before actually shooting up, reaching the 100%, the entry. 1 second, right here, or the 27. You're starting to see, you see that everything is starting to make more sense, guys. Whenever you see this, important, even watch it daily, or watch this video several times if you want to understand it, how price action works. But you see price action is breaking the structures, creating new highs, bouncing up, is bouncing up. So that's a good sign the price will continue to the upside. You get concerned when the price, if the price breaks this very strong support on a 4 hour, this is a 4 hour, right? You see a big strong support right here. Then at that point, you can get concerned. You can think, oh, maybe this thing is going to be dropping even lower. Or you just be impatient and wait for the 4 hour candle to close, because most likely will create a big wick. The price could give you a sign that the price wants to go down, and then start to retrace. And then when it closes, it will, the body of the candle will close above here, and you see just a weak rejection. But anyways, guess what? It's touching either the 50% or the Fibonacci. So it's a good sign. By seeing the wick, it's already a good sign the price will want to push up. So that will give you an idea if you want to hold an entry for longer or not. That's going to be up to you. But I think that would be all. This is a very interesting subject, guys. I love price action. I love trading it. I do have my indicators, but I almost don't use them anymore because I know, like right here, for example, if you're following me for a long time, the TP strategy, for example, the TP strategy that I have, it will give you the signals. All of them are here. All the signals to buy are going to tell you right here, because I already know. I don't like having my indicators on the line. I'm almost likely I'm going to be using just RSI to spot divergences. I love this indicator. But other than that, I just watch fully price action, just price action. Anyways, guys, if you want to see something else, you want to see something different, anything else you want me to talk about price action, I did explain a bit how to use the Fibonacci, the entry points, the breakout. The breakout will count as you see the body of the candle closing above. If you don't see a body of the candle closing above, that is not an entry. You have to wait. Alrighty. So that will be all, guys. Follow me on Telegram if you want to see me trading live every day. during New York Stock Exchange opening, and subscribe if you want to see more things like this. Take it easy, guys. See you guys in the next episode. Goodbye.